Welcome back to the channel and welcome back to another weekly price action review. So it's been a minute, but they are still important. And yes, I haven't recorded. Certainly didn't record last week's, but it was still complete as part of my weekly process. So I want to get straight into this one. Give you guys my takeaways from the previous week and areas where I think opportunity may have presented itself, but just as a general overview of market price action and what my takeaways were for the week. So just looking at the monthly time frame, one of the things that we can see on the monthly is this purge here of the previous weekly low, and there is SMT down here as well, but this purge the previous monthly low, and the rejection with this bullish close for January. So heading into February, I'm looking at this as potential continuation of higher prices, targeting previous monthly's high, and then we've got this old high monthly up here. So if we begin on the weekly time frame, first bit of lipstick on the charts. So as I mentioned, following last week's price action, so this week here, where I noted this large bullish expansion candle, right? So SMT existed down here, targeting this old high monthly. We've obviously got previous monthly high here for January. Price fails to take out that high, trades back down into a discount. So here, I believe we have SMT as well, supporting the idea of further higher prices, right? So my anticipation based on this week here was a continuation of higher prices, targeting the previous monthly high as the high time frame draw on liquidity. Okay, so as I said, this initial move higher was initiated by this high time frame SMT at the lows here. Okay, following purge of key liquidity in the form of the previous monthly low. Therefore, the natural, if you're looking at the monthly time frame, the natural premium PD array would be the previous monthly high. Okay. So, excuse me. So I had noted how, relative to this weekly time frame, that despite this consolidation that we're in, the overall weekly order flow remained to the upside, and that was in part supporting my view of the market repricing to and certainly targeting the previous monthly high. Okay, so as part of my weekly outlook, if you will, my analysis, I had outlined the old low weekly here and the high time frame objective of the previous monthly high. Okay, so we drop down to the daily. Let's just enlarge that a little bit more. Okay. Ooh, itchy nose. Okay, so following on from that weekly time frame commentary, where I'd outlined my view of seeking higher prices to the high time frame draw on liquidity, targeting specifically that previous monthly high. I wanted to see the market confirm continuation of bullish price action. So ultimately, I want to see a daily discount PD array form and support the market in terms of confirming that high time frame narrative. So ultimately, what do we see here? Bank holiday Monday, so let's look at Tuesday. Tuesday trades lower, purges this Friday low, trades down into this busy daily, and then we see the continuation of higher prices to the previous monthly high. Okay, and then once we've purged this previous monthly high, so that's the high time frame objective, in my opinion, met. But then we have this high time frame SMT at the highs with YM. Now remember, when it's with YM, in my opinion, that is a, let's put it this way. When there's a high time frame SMT of sorts with NQ, that is a higher probability setup than if it was a cracking correlation with YM. Okay, that's not to say that cracks in correlation with YM would not, support the idea of market reversals. It's purely that the alignment of ES and NQ being the larger equity assets, they are likely to significantly influence market direction than YM. Okay. Hence the S&P 500 of 500 companies, Nasdaq 100 of 100 tech companies, and then obviously Dow Jones 30. Okay, so we had that crank correlation at the highs with YM before the market repriced aggressively lower, trading to and through this busy daily and just falling short of the old low daily and the previous weekly low. Okay, and this was that high time frame SMT that I was mentioning at the lows to support the idea of higher prices. So obviously that was a specific week, and then continue higher. So dropping down to the 4 hour. So hopefully that's pretty sort of clear thus far. I'm going to enlarge this because there's a fair bit to discuss on this time frame. Okay, so as detailed on the daily time frame, in terms of the daily commentary. Let me just have a bit of coffee. I should really turn my phones off as well. Do apologise. Bear with me a second. Okay. So as we mentioned on the daily time frame, if we look at Tuesday specifically, excuse me. So the market traded down into the. Sorry, let me just update that. There we go. Okay, so the market traded down into the overlapping BCH4 and BC daily. So the market is traded down here. Okay. Where we noted this high time frame SMT following the purge of Friday's low, okay, and also price trading below the true week open key price level, which supports the idea of high probability longs. Okay, so that's looking at here. The market then displaces higher. Okay. But failed to purge what would have been essentially the high of the day, but we can classify that as the high of the day. It failed to purge that high. Which ultimately left relative equal highs here, which in turn would be a near-term high time frame drawn liquidity if we were to trade below. So again, with this previous monthly high as the high time frame drawn liquidity, that's the anticipation of where the market is drawing to. We failed to trade and purge the previous daily high. We haven't touched the previous monthly high, and the market has repriced lower here. So this creates this engineered liquidity pool up here, which could be a near-term drawn liquidity. And if the market is now going to go up here and purge this liquidity pool, then the likelihood is it's going to also purge the previous monthly high. Okay, so the market reprices back down into the BCH4, fails to purge this Tuesday low. Okay, and trades back below the true week open, supporting the idea of high probability longs again. Okay, bearing in mind that the high time frame drawn liquidity has not been reached. Okay, in terms of that near term draw. Okay, so then it trades lower. We note the high time frame SMT with YM, which is setting the stage for higher prices, targeting the previous daily high and also the previous monthly high time frame draw liquidity, which was obviously, the market ultimately displaced higher to those high time frame objectives, and also purged those two objectives and formed the high of the week. Okay. At that point, we then note the high time frame cracking correlation at the highs. In actual fact, we get an overlap of two high time frame cracking correlations, a higher and a lower one. And that is a high probability setup. Whenever you get a high time frame cracking correlation, which is an overlap cracking correlation between a higher time frame and a lower time frame. So in this instance here, we have on the weekly time frame, we've got January high, it's previous monthly high purge here. So on the weekly time frame. So if we drop back down to the 4 hour, we then also have this 4 hour high time frame cracking correlation to the aligned high. And this one with NQ, which is a high probability divergence. And also, we have the market above the true week open supporting high probability shorts. So this, when confirmed that high time frame cracking correlation, whereby the market is likely to target a weekly key price level. Okay. And if we go back out to the weekly, the only weekly key price level that we can see here would be this. Well, you've got the old low weekly here, you could argue, but if you really, let's see, we've got this previous weekly low here. I just reference that on the daily time frame instead. So let's just go back to here. Okay, so this was confirmed, as I said, by low time frame confluences, where the market rejected those high time frame key price levels and ultimately repricing lower. So what am I explaining there? What am I saying? If we look at this previous daily high and we look at this previous weekly high, relative to the daily and 4 hour time frame, we're seeing clear, so a higher time frame, a high time frame, if you will. We are seeing candle rejections from here. What could be classified as respect candles, if you will. I'm just looking at that as just straight up rejection candles, right? Bodies of the candles closing back inside of the range of those key price levels. So essentially, that's what I'm alluding to by the rejection. Okay. So then the market reprices lower and confirms this high probability, this one here, taking out liquidity, this candle right here, taking out liquidity to the left, becomes the high probability bearish order block. The market confirms following the high time frame crack in correlation. So what we see is how the market retraces back into that key price level before ultimately displacing lower. I then note this position swing point down here, which is the catalyst for near-term movement, not coupled with high time frame cracking correlation. So we're looking at this as a symmetrical low, but nonetheless, it's the catalyst as to why we get this short-term retracement back into this SIBI H4. Okay. And specifically around that SIBI is if you look at the aligned SIBI on NQ, you note how the bodies of the candles have purged the high of this SIBI, or invalidated it, if you will. So therefore, that's indicating to me that ES is the asset to focus on relative to lower prices, because it's respecting its premium PD arrays. Okay, it's extremely weak in contrast to NQ. So then the market trades up into the SIBI, forms this high time frame SMT with NQ before displacing aggressively lower to close the week, purging previous daily lows and just failing short of the old low daily. Okay, so let's drop that into the hourly. Okay, bit to unpack here, so let's go day by day. So Monday we know was bank holiday, and also it's typically a non-trading day for me. So because it was a bank holiday, I typically combined Monday's price action with the previous Friday, and that's how I will form previous daily highs and various imbalances and so on and so forth. Okay, so Tuesday, so following the confirmation of that true week open here, the market immediately opened, repriced, in fact displaced higher to form the London high. And then the market trades down into this BISI H1, which I haven't marked up, but the market trades down into where it finds support. Okay, so essentially trading below this level here, that kind of gave you the confidence that this was not going to come higher on this day. I'm not saying that it can't come higher, it just isn't going to do it on okay, so I'm just going to mark this in and then get a little bit of coffee. So it found support, and then the market trades high and purged this London high where we see low time frame SMT with NQ before the market displaces aggressively lower. Okay, but remember, we didn't have any high time frame cracking correlation there to support that move lower, so that isn't something that would ultimately take. Market trades down into this BISI H4 overlapping with the BISI daily, and en route purges the London low, the Asia low here, and also this New York AM low as it consolidated and continued to reprice lower. And this is where we know our first, during the New York PM session, our high time frame cracking correlation with NQ supporting higher prices, which the market then displaces higher, as we see from this imbalance candle here. Where this SIBI obviously indicates a change in sentiment. But ultimately the market trades higher, but still fails to purge the high. Okay, so that created those relative equal highs, which would ultimately be targeted. So as we head into Wednesday, the market opens and immediately reprices lower, back below the true week open, and into the highs of the BISI H4 after purging this SSL H1. So that's key. The market then formed this high time frame SMT with YM, but one of the things that's important to note is, technically speaking, this SMT, if we were looking at, in fact, let's just do it for sake of this. So if we go to YM, I wonder, could we do new scale? Let's do new scale. Maybe I shouldn't have done new scale. Oh. Let's get rid of that. Let's do same scale. What did I just do? Did I just do... Oh, have I just done the same thing again? Maybe I needed new scale. Let's try it one more time. New scale. Did that work? Alright, fine. Let's just bring that down. You'll get the point in a second. So, candles. So, if you look at this low here, which aligns with this low time frame SMT low there, that low and this low, so the cracking correlation is here, the high time frame cracking correlation is here to here. However, that's the low on ES. So a combination of the low time frame cracking correlation here and the high time frame cracking correlation here is responsible for the high time frame cracking correlation here on YM. Okay, so, and if you look at YM, so, okay, so let's just get a, let's do it like this. Let me just make this, for argument's sake, let's just make this red. Hopefully. Right, so we take this low. Oh, just thought we can't, it's not easy to do it this way. So that low there, so that's the SMT, right? And then accompanying that, we have this low to there aligned. So we have two SMTs and SMTs. That's what creates the high probability setup there. So although I have taken this low, in actual fact, you could draw this line all the way across to here and have this line across here, and that would reference the two SMTs. Okay. So, but what I'm making a point of is this SMT is not confirmed until this one has been confirmed, right? And obviously, because it's a double cracking correlation, that makes this move here extremely high probability. Okay, so then the market displaces higher aggressively as we concede to the high time frame draw and liquidity, where as it purges through and takes out the sorry, let's just get rid of that there, and it takes out the previous day's high and purges the previous monthly high here, the market forms an overlap of high time frame cracking correlations at the highs in the form of what we saw on the weekly time frame, that high time frame cracking correlation referencing the true monthly highs, and also this high time frame cracking correlation above above the Tuesday high with NQ. So now we've got again a converging, overlapping high time frame cracking correlation. This is high probability, okay, forming above the true week open. And that's how we ultimately closed the day. Okay, so then when we head into Thursday, prior to the true day open, which is here at 12 midnight, the market begins to reprice lower, where ultimately, as we saw in the H4 time frame, confirms this bearish high probability H4 order block. Also, it's overlapping with the high probability hourly order block. So that's a good sign as well in terms of supporting potential lower prices. Okay. We also see how the market set this London low initially during the day before repricing higher into the high time frame bearish order block, where ultimately it's setting the London high, which became a H4 significant high, which was referenced later on in the week. So ultimately, the market here reprices lower, purges this low, and in actual fact, it purged the low, and we have a low time frame SMT in there. Okay, and then that initiates the market to reprice higher. Okay, and then we get actually does it. I'm going to remove this for the time being, because I may have got this confused with a different area of the week, so I'm going to remove that for the time being. But ultimately, we form the London low, we tag the London low here, the market reprices higher, and then we get this low time frame SMT forming a model in itself with NQ here, and that was the catalyst inside of this H1 order block / H4 high probability, and that sets the stage for the market to aggressively reprice lower. Okay, we also have, if we notice when we purge this London low, the market forms this balanced price range here where the market respects, trades into it, rejects immediately. And as I said, coupled with the high time frame, the high impact news driver, the market aggressively displaces lower, purging the previous day's low Q3 and the previous day's low Q2 to form ultimately the low of the day before we see this retracement back up into the daily range. And then on Friday, the market opens, it sets the London low, so we get a bit of consolidation, sets the London low. We've got the Asia high here, and then we start to consolidate with a trend higher where the market purges this Asia high, which is symmetrical across the indices members. However, we get this high time frame cracking correlation here where NQ purged this H4 high, so it's a high time frame liquidity pool, whilst ES did not, and that set the stage for an aggressive move lower, purging the previous daily low and just failing short of the old low daily and the previous weekly low to set and close the week. So that's my takeaways from the week. Ultimately, a bearish week. Profile seek and destroy bearish Friday, and the high time frame objective, as far as I'm concerned, was the previous monthly high. So hopefully, I'm going to wrap this up here. Hopefully you've taken something away. There's a number of key things that I spoke about in there, which hopefully you noted down and potentially can add to your trading models, trading plans, and so on and so forth. So hopefully you found this one useful. And as always, I always mention, make sure you do your weekly price action journals. Super important, and they will be the cornerstone and fabric of your continuous trading development. So again, hopefully you found this one useful. Hopefully you've managed to take some things away. And guys, I'm going to leave it here, and I'll catch you in the next one.